The markets had some sharp drops today, and looking at the E-mini S&P 500 futures, I want to get ready for the next day by rewinding back to the weekly chart, moving down to the intraday, and sharing my prep with you. So here I am on the E-mini S&P 500 futures December contract, weekly chart, and you can see that this week on Monday we had a push higher, but it's already so far this week we're already down near where we opened. As for the daily chart, there's a lot of annotations I have on here. I walked through exactly what they all mean with my SNPH Pro students during our live session this morning. And what I want to focus on is how we had strong push higher and then a dark cloud cover candle here today on Tuesday, October 15th. Now, that alone doesn't tell me that we're going to continue lower, but it is an indication that perhaps the market is weaker than expected. So I want to take a look at some of the levels in here as well as the intraday levels. Now, if you're newer here, I'm Hema Reddy. I use price action, so candlesticks like this, market timing, that's forecasting, and momentum, my favorite indicator down below, the RSI Power Zones, to boost my trading and that of my trading tribes. So a couple of things I want to point out in the daily before I move to the weekly or to the intraday. So see this trend line. It started on the September 20th low, connected on the September 24th low. Well, it also helped with measuring some of the consolidation that we had last week, and look at how it's capped the past 2 days. So that black trend line is important. I want to keep it on my charts. Also look, the RSI Power Zones are near their bear resistance power zone, but they haven't put in a bearish pattern yet. So again, there's still hope for bulls to resume, but let's go to the intraday for more detail. On the 60-minute chart, I published my report into the hour ending 9 a.m., around 8:23 a.m. I specifically talked about two zones, this zone of resistance up above and this zone of resistance here that was supported by 5898.5. So after 10 a.m., the market started weakening. It took out that 5898.5, and I had support targets that were taken out on the way down. So how do you prepare your charts and how do you determine your next levels when there's a wipeout like this, right? Well, the first thing is to look at which significant levels may have been breached. So the ones I wrote about in my outlook were 5898.5. So what I will do is I will turn that into a gray dashed line. That way, when I come back to my own analysis tomorrow, I'll know, hey, that was a key support level, but it was violated. So gray means old, dash means no longer in place, and I'll remove the other lines around it and I'll change that label to gray. So I use a lot of color coding in my analysis because then that way I don't have to think about what does that line mean. I know exactly what that means when I open it up to start trading the next day. Okay, the next support I had was 8425, and I'm just referring to the last four digits to abbreviate. Now this was a nano level, so a Gann candlestick support from Monday's range, and I teach about those in my Gann candlesticks trading system. After that, there was a zone of support that I was eyeing, and it was at 5867.13 to 5866.75. So these two levels right here. And again, these gray lines I'm just putting to ballpark. I don't need to draw them exactly because that's talking about old price action. What will be helpful is putting the gray labels so I know, okay, this is what unfolded versus what I had looked at as expected support. So weakening below 5898.5 would risk 5884.25, which guards 5867.13 to 5866.75. Now, notice that all of this came back right towards that purple trend line. I removed it on the daily chart because it's sort of getting muddled around. But another thing you should do when you have dramatic moves like this is don't lose perspective, okay? Come down and squish up your data. Just get perspective on the whole history. So I'm obviously going to have a lot of other annotations that you might observe. Okay, now it doesn't look so scary, all right? Today's move perhaps was just a return to this consolidation that we had broken out of. Now I'm still going to remove this purple trend line because it's not as useful to me because we've been dancing around it. But again, can you see how that kind of gives me some perspective? So the first step was to note the levels that were actually violated that you were expecting. And the second is to get perspective by looking at some history. Now we zoom back to the more recent action. And now what I want to do is, because there was a sharp fall in one direction, I want to eliminate any other levels that had been violated. So now I've brought myself all the way down, and my next intact support is at 5850. Okay. Then I'm going to come in and I'm going to look at the resistance levels that I can add in. I don't know what will happen overnight, but I sure know that, if there's a recovery, there's plenty of new resistance here to look at. So it's always best to go from right to left, looking at the price action. So I'm going to take my little blue horizontal line and go right to left. All right, the first thing I see here is this candle with the green body. So the high of that candle is my new resistance, 5890.75. Now I'm just ballparking these lines because when I actually trade, like I show with my students in our labs once a week, I use alert lines, and so I replace them. This is just a visual for my research report. And now I'm going to go in my own report and I'm going to write 5980.75. 5890.75, so it's important to check for typos. Intraday lower high. Doesn't have to have a fancy description, okay? Then I'll again go from right to left. So now right to left. Well, there was this high during the session, 5914. Now it's up to you. Do you want to keep every significant level, even if it means you're kind of cluttering up your data? Right? 5918, 5915, 5914. Or do you want to just pick the most significant? I'd rather have more levels than less, especially if they are clear, distinct highs on my main analysis time frame, which is the 60-minute chart. So every one of these highs is distinct, so why remove it? All right, I'm also going to come in and I'm going to identify some old bottoms that may provide resistance. So I have one here at 5902.25. The market recovers back to these levels. That could provide a good resistance area. And again, as I label these, I'm jotting these in my report on the side and keeping all the prices in order. 5902.25, intraday old bottom. That's what you call that. And again, if you go right to left here, we also have an intraday old bottom here, 5877.5. Now I'm just doing this off the 60-minute time frame. So what this does is it gives me perspective on what happened before I'm in like the heat of getting ready to trade. So I have 3 times that I prep for the market. The night before, like you see here. Then before the market opened, about an hour, hour and a half before, and that's when I write my Skinny in the Mini ES Futures report for my S&PH Pro members. And then the third time I prep is after I go have some breakfast, take a break after publishing the Skinny, and I come back to my desk around between 9:05 and 9:10 a.m. Eastern, if it's just me by myself, and then I do a full round of prep. So that's what the pros do. You got to have multiple phases of assessing the data so you're not just dealing with the whole messy chart the next morning. So if that's ever happened to you, now you know how to resolve it. So this is about as far as I can go, and I can write a description of what happened as well in my notes. So I had my previous outlook in place. Well, what actually happened? Well, I've moved my gray vertical line to the hour ending at 9 a.m. because this report was published at actually 8:18. And I can say futures briefly recovered, but only to 5914. This coincided with the RSI Power Zones on the 60-minute chart capping right here. Ooh, right near the bear resistance power zone. It's technically 65, the upper boundary. It did at 6509. Right near the bear resistance power zone, 6509. I'll even go and write in that level. So I get this question, which is, why do you label your peaks and troughs, Seema, on your market that you trade, on their indicator? It's because it keeps me attuned to what's happening. It keeps me more subjective, okay? So this was not a bull bear RSI face-off setup. It was simply a weaker market. And then from there, futures plummeted, fell, slid, whatever you want to call it. So I'm going to say futures plummeted lower, extending down to, and that's when I look at what they did during the close, 5850 into the end of Tuesday's regular session. And that's all she wrote. Now as a trader, I don't have anything else to do on this chart. I can review my trades for the day, my notes, my video recap, my journal entries, but now I've done what I need to be prepared for whatever's going to happen in the overnight. And then I will, like I said, come back and finalize this. So if you want to see the final outcome of my research here on the ES, then you would join my S&P Edge Pro, and we have a special going on that ends real soon. So you want to make sure you keep an eye on your emails. And this is where I'll show the final data for what I think will happen into the open on Wednesday, October 16th. And I do the same process every night. So this is how you deal with analyzing your markets after extreme market moves. Again, you can listen back for the 3 steps. Number 1, look at all the levels that were violated. Number 2, zoom out, get more history so you understand the perspective of any other annotations you want to address. And then 3, come in and give yourself the new updated price levels. All right, hope this was helpful to you. Please let me know with a like on this video if you found value in it. Drop a comment down below. Let me know your key takeaways or any other markets you'd like to see me do this type of analysis on. Subscribe to my channel if you haven't already, and I'll catch you in the next video.